Not only are we seeing collapsing home sales, we are now seeing home sale prices go down nationally. And this is a huge sign that the housing crash in America is progressing, and it is progressing fast.
Year over year, sales are down 22.5%. That is the biggest year over year decline since April of 2011. So the housing market is clearly in a recession.
Home prices are generally too high to entice buyers who face skyrocketing mortgage rates. However, sellers are hesitant to lower their asking prices. Sales are plummeting, and some people are simply stepping away from deals. People expecting a major housing crash may be surprised at how quickly it occurs. Homeowners don't need to sell immediately, especially since the great majority have low-interest mortgages that they can't get right now. With home sales falling, the big price gains we've seen over the last 2 years are decelerating at record levels, according to Case-Shiller data released last week. Redfin data shows that the number of new listings entering the market has decreased by 14% since this time last year. The demand index of the real estate firm, which tracks the volume of purchasers viewing properties and making offers, is down 13%.
Home sales around America have collapsed to the lowest level of 10 years, according to the National Association of Realtors. Check this out, everyone. National Association of Realtors just reported that home sales retreated 5.9% in July. And get this, everyone, that's down 20% from 1 year ago. And not only that, everyone, the NAR reported that while home prices are still up 10% year over year, they went down by $10,000 in July. So this is big news. Not only are we seeing collapsing home sales, which is a big problem for realtors, it's a big problem for the U.S. housing market, we are now seeing home sale prices go down nationally, not just in a handful of markets, which I've talked about on this video, but we're seeing sale prices go down month over month across America. And this is a huge sign that the housing crash in America is progressing, and it is progressing fast, because everyone, you got to understand what this declining home sale environment really means. Let me show you some historical data. We're looking at over 20 years of data on home sales in America, data from the National Association of Realtors. And what you see here is that the seasonally adjusted annual home sale figure was 4.8 million in July 2022. Well, is that good? Is that bad? Well, you can see that's actually pretty bad. That's one of the lowest levels in a decade. So what that means is buyers, as I've said many times on this channel, buyers are out of the housing market. Home sales have crashed tremendously in the last 6 to 7 months. What I think is interesting, though, and what I want you all to pay attention to, if you're trying to figure out what's going to happen in this housing market into the future, pay attention to what happened to home sales back in the mid-2000s, right? At the peak of the last housing bubble, particularly December 06, home sales were 6.4 million. And then in the span of a year, they crashed down to 4.4 million in late 07. This is very similar to what's going on today in 2022. So you see the parallel how now in the summer of 2022, we're almost in the same situation we were at the end of 2007, kind of right before that last housing bubble turned into a major crash. And so folks, that's why I believe we are just getting started on these home price declines, because the fact that home sales have gone down by so much, and the realtors are freaking out about this because realtors make their money off the home sale. Every time a home is sold, the realtor gets the commission, 2.5–3%. Well, we have a huge collapse in home sales, and that's historically a sign of declining home prices. And to solidify this in your guys' mind, I want to show you a specific example in a specific city that the housing crash is raging right now, and both sales and prices are going down. So you can understand what this looks like, what a housing crash looks like in this market, and how it's going to apply to your city over the next 3 to 6 months. Take a look at this, everyone. I'm going to show you data from Redfin, and here we're looking at Las Vegas. We're looking at the Las Vegas housing market in terms of understanding the yellow line, how inventory is increasing. You can see inventory in Vegas has gone up all the way to nearly 12,000 homes on the market. It's doubled in just a couple months, and this is basically an inventory level that's almost at the same level it was in 2019 before the pandemic. So Vegas, huge surge in inventory. But what you got to pay attention to is the surge in inventory relative to the decline in home sales. That's the blue line. Home sales in Vegas are declining as inventory is going up. And when you combine these two metrics, you get something called the months of supply on the market. So in Vegas right now, the months of supply, there's 4.7 months of inventory for the existing level of home sales. You can see in Vegas, the months of supply has absolutely exploded to 4.7, which is now higher than it was in 2019. Again, meaning, folks, that the inventory has surged a lot, just as the home sales are collapsing, meaning that, the sellers in the Vegas housing market are having to get increasingly desperate in order to offload their home. And if the seller is having to get increasingly desperate in this type of market, what are they going to do? Well, of course, they are going to cut the price.
But first of all, we got July existing home sales, which fell for the 8th month out of 9. And in fact, year over year, sales are down 22.5%. That is the biggest year over year decline since April of 2011. The index is now at 89.8. That is the lowest the index has been since October of 2011. If you exclude the one-off spike in early 2020, that was strictly related to the COVID lockdown. So the housing market is clearly in a recession. In fact, July new home sales collapsed by 12.6%. That was a much bigger decline than they had been expecting. And the year-over-year collapse in new home sales is 29.6%. New home sales are now down for 6 out of the past 7 months, and they stand at the lowest level since January of 2016. And probably more important, if you look at the supply of new homes that are on the market, it's the most since March of 2009. Now, where were we in March of 2009? That was the bottom of the bear market. The S&P 500 was down 48% from its high in March of 2009. We had just finished the great financial crisis, and we were in the middle of the worst recession since the Great Depression. You have to go back to that point in time to find a situation where you had more unsold new homes on the market. Now, why are these homes sitting on the market unsold? Because people can't afford them. They are too expensive. It costs too much to build them, and now it costs far too much to borrow the money to buy them. That's why I've been saying for a while that I think the new home market is going to completely implode, that to the extent that people buy homes, they're going to buy existing homes. And that's because the price of those homes is going to be lower because they don't have to be built. They're already here. But what I think is going to happen is a lot of these homes are going to be selling for less than the cost to replace them because people can't afford to replace them. They can only buy what's already here. But the ramifications for the economy are severe because homes that already exist don't have to be built. New homes require workers to build them. So there's a lot of economic activity and jobs that are associated with building new homes. You don't have nearly as many jobs associated with selling the homes that have already been built. So this has ramifications for the economy, for the employment. All of this data is weak and is consistent with not just a housing recession, but a recession in general. And by the way, not only are new home sales starting to fall, but prices are starting to fall as well. And prices are going to fall further for these homes because people can't afford to buy them where interest rates are now. And if the Federal Reserve continues to raise rates as they intend to do, homes that are unaffordable now will be even more unaffordable later. The only thing that could make them affordable is a drop in price. But because new home prices are going to drop, builders are going to stop building them because they're not going to be able to build homes and sell them for a profit. That's why this industry is going into a severe recession, and there's going to be widespread job losses for anybody who works in the housing industry.
Last year, it was common to see long lines at open houses in the U.S. for homes of all prices and sizes, but things have clearly changed. Families in the U.S. who find it more expensive to afford a home and don't need it right away are either abandoning or finding more convenient accommodations. This has some consequences. On the one hand, fewer people can and want to buy homes, possibly despite the state of need, resulting in a sharp drop in mortgage applications. On the other hand, the entire industry suffers, and so the American economy suffers a sharp contraction. Thanks for watching till the end. If you find this useful, like, share, comment, and subscribe to help this channel.